The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and thank you for being with me today. Good afternoon to our friends across the Tasman Sea and New Zealand. Good morning to our friends in Australia. David, I want to dial in using my telephone but cannot. Just let me reply to this gentleman. Don't ask me anything technical, please, folks. Joseph, how's it going? It's going great, mate. And Norbert's fantastic. Give me a second. Can't help. This is David. Don't ask me anything technical, folks. I have no idea about any of this stuff. Okay, let's see what's happening. Yes, so good morning. How's the sound, folks? Can everyone hear me all right? Just type in the questions box. Yes, Norbert can up in Canada. That's great, mate. And Joseph and Rose. Hello, Rose is in Missoula. I think I said that right this time, Rose. I hope so. Donnie Maydell, he's up in Canada. So hi, folks. Great to have you with us in New York for Hugh. Great. I started really early this morning, and Janet, hello, darling. Nice to have you with us. Hope your legs recovered. Janet lives up in that cold country called Canada, where it's either snowing or there's ice on the sidewalk, and she slipped over and broke her ankle. Poor girl. Okay. Sorry, David. I'm a Luddite, mate. I'm too old for technology. When I was a young man, computers weren't invented. And then I bought a computer. This is back in the MS-DOS days. And you had to type in all these commands to get it to work. So I sat there looking at it, and it sat there looking at me for about 2 years. I never did get it to work. Biawa, Hank Woolley, you're up on the Gold Coast, mate. You're a beautiful day here. What time here, Joseph? It's 10:32 a.m. on Friday morning. 32 degrees now. See, oh, beautiful, Janet. Yeah, well, about the same there. It's the start, second or third day of spring here. It was 28 yesterday. It's 26 today. It's glorious. And as I said, I got up very early this morning to start counting my money. Boy, oh boy, oh boy, we've had a trading week and a half, haven't we? So all you folks should just be absolutely rolling in it all today. It's just been some really great trading, which we've been able to signal to you very clearly. So if you didn't get the lolly this week, don't blame me. The signals have been there. It's really been quite splendid, quite splendid. Okay, so let's see who's here. Lots of people. Let's see who else we've got here. Oh dear, all my usual friends. Great to have you with us, folks. Adrian, he's a new tutorial guy. Alan Varian up there in Brisbane. Alex, more Andrews. Art Chase, and my smoking nemesis. I'm resolved every day I'm going to give up this smoking sometime or other. Chase just hasn't happened yet. Daryl over in Mossman. Are you still in Mossman, Daryl? I hope everything's going a bit better for you, old mate. Dave Webby, the black line man. You've got a couple of things to see today that'll interest you. David's the king of the black lines. Donnie up there in Canada, we said hello to him. Harold over in Reading, my friend, the Goldbug Chief, is there. So Hugh Sinclair. Nice to have you with us here. James Bond, we're honoured. Janet's here, and Joe, Austin, Kurt. Hello, Kurt. I didn't think you're going to make it today. Nice to have you here. Ask me later about what's going on with the mother-in-law, and you'll quit, Joe. Daryl's over in Cremorne. Tide has turned. Oh, thank goodness for you. Hey, Joe, mother-in-law problems, eh? Well, I'm a world expert on those, mate. Lloyd, good to have you with us. Lloyd, Manish, nice to see you again. Mark, and Mark Lutz, he's He's the tutorial spreadsheet guru. He's been knocking out the most amazing, he's doing a tutorial, the most amazing figures on trading futures, way beyond what you believe is possible. Marilyn's with us, and Marilyn's actually knocking out better than those figures. So she's going to be a star trader. She's doing a tutorial now. Michael Pell, good to have you, my mystery man. He's a great bloke. He came to the Waiheke tutorial a couple of years ago. Mike Murph, he's a tutorial guy. Milton, nice to see you with us, mate. Norbert, of course, he's a tutorial guy. It's glad to have you with us. Rob H., the guru from New Zealand. Rob's a great technical analyst. I've got some very interesting insights into markets. Scotty Lancaster over there in Kiwi land, good to have you with us. Stephen Sushasini, nice to have you. Tom, the wealth manager in Florida. I've been abused for referring to him as hedge fund folks. They're not. They're Tom and his partner are wealth fund people. Tyson, good to have you here. Okay. Dave, greeting from the UK. Did the distance learning course. Yeah, sure you did. Dave, I haven't heard from you for a long time. Glad to have you with us. Terrific. Here's Joe, who's got the mother-in-law troubles. She smoked for years and quit 20 years ago. She has pulmonary hypertension's in bad shape. Mate, I've had a triple bypass 20-odd years ago, and I smoke 3 packets a day, and I love it. And I will drop dead with a stroke or a heart attack one day. And when I do, I hope you will remember me fondly. When I do, sell your shares in the tobacco companies immediately because they'll go broke. Okay, Tyson's glad to be here. Terrific to have you with us, folks. All wonderful. Okay, anyway, look, what a huge week we've had. We're going to look at some of those trades. We'll just show you some of the details. What I want to talk to you about today is trading the Danielcode. And my suspicion is that I haven't properly explained to you the benefits you can get from trading the Danielcode or how to link some of these trades together. So what the website does is basically it provides turn signals. They're the TO3 signals. And occasionally, not every day, but intermediately, it will create plus signals. These are different. These are trend continuation signals. And then at the extremities, we have the blue line trades, which are another form of turn signal, but they tend to be more powerful than simply the TO3 signals. But I want to go through some of those things with you. And most of all today, I want to try and show you how you can link these signals up to get a whole lot more out of your trading, because honestly, it's fantastic what we do here. The results that it's possible to get are quite extraordinary. I've got a good number of folks doing the video tutorials now, which is the new way we're doing it. Not so new now. We've been doing it for 18, 19 months. But when we do the video tutorials, they're all one-on-one with me. But we record each session so you can go through it again and again. Rose, it's terrific to have these videos so you can just refresh your memory, because the most usual comment from anyone doing a Danielcode tutorial is they say, look, it's like having a fire hose of information down your throat. There's too much to digest the first time, and by having every session recorded, you can just go through those lessons again and again and again. And Rose, incidentally, Terry's done your next video, and it should be here while this tutorial's on, this webinar's on. I'll send it to you as soon as I can. Let's move on, folks, and start having a look at what we've got today. For those of you who are new to us here, markets are rational, orderly, and sometimes predictable. And what the Danielcode is, it's a set of proprietary ratios that control time and price in all markets. And that's vital, because these are the places at which markets turn. So here's what we do. The website creates high probability turn signals. They're called the TO3 signals. We also create some trade continuation signals in the TO3 plus package. We provide unique and unparalleled support and resistance levels for selected futures and Forex. and we forecast future turning points in both time and price with the 4th and 5th seal. We provide trading for newer traders who want to learn the proper way to trade profitably and safely. We have people like Frank DB, who now runs the 4th seal for us. When he came to me, he'd never seen a financial chart. Sister Sage, who's one of our very best traders, had never seen a financial chart in her life until she came to me. And then on the other hand, we have folks who are experienced traders, like our dentist friend up in Chicago, who's an absolute gun trader. And we make them better. We take them to the elite level of trading. So whatever your level of trading, folks, if you've never seen a financial chart before, that's fine. Think about doing a Danielcode tutorial. I'll take you all the way from simple entries and exits up to the most sophisticated forms of price and time analysis that you can see. So we do that for everyone. Don't feel shy about it if you're a newbie. Marilyn, for example, is a newbie. We had a couple of extra sessions to just get the basics into her first. She's very happy with all of that, Marilyn, aren't you? And you can type in the question box, Marilyn, if you want to send me a message here. And let's have a look at what we've been doing, folks. This is the Dow Jones contract. And I want to show you what our signals have done recently. I'll just bring this up on the other computer here so I can actually tell you some dates and what's been happening. And this starts off in July the 25th is that first signal. And you'll see I put on there correlated plus buy signals. Some of these markets are highly correlated. All of the equities, NASDAQ, Dow, S&P, Russell, and Germany's DAX are so highly correlated directionally that if you have a signal in any one of them, you can execute it in any other one of them, so long as the signal is elected. By saying it's elected, we have price points that we show in our trade program at the Danielcode website and tell you exactly where to enter these trades, and that's the point at which we say the trade is elected. And not all trades by any means are elected. Probably not much better than 55% of trades are actually elected. The rest don't respond to the signal on that day and they continue to go. But have a look at this trade here. You see that bar, I've got the little signal on there. It's actually, the day the signal came out was July the 24th. And that was a correlated plus buy signal, by which I mean it didn't set up a signal in this market, the Dow, but it did set up signals in the S&P and the DAX. Correct me, someone always corrects me. I was going to say, correct me if I'm wrong. Perhaps you'd like to just take me on my word, but if not, wait till I look up the book of words here. Being a old-fashioned sort of guy, everything is written down eventually, and I actually use a couple of Parker pens. I have 3 of them. They're all very old like me. Not as old. And I have a blue one, a black one, and a red one. And here we are on 724, which is the bar. You can see that first signal on that says correlated plus buy signals. We had a buy in 724. Let me see, we had a buy in the S&P. No, can't find them, on the wrong page here, 724. Oh, I've copied that. Yes, I've been told. Russell. Got a buy in the Russell. So if we have a buy, for example, here, it didn't set up in the Dow chart. But because these markets are so correlated, if you have a buy signal, for example, in this instance, in one of the other markets, and we had a plus buy signal in the Russell for that day, you can execute it in any of the other correlated markets. Does everybody understand that? Does that make sense to you? That's what happens when you have highly correlated markets. So if you had a buy signal in the DAX, you could have bought the Dow or the S&P or the Russell, so long as their trades were elected, which in this case, to take a buy signal, it's 2 ticks above the setup bar is where you enter. Put your initial stop 2 ticks below the setup bar. It all works the same. But you can see here we had this correlated buy signal starting off this tremendous run in July the 24th. It went up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days nicely without one counter trend. All you had to do was move your stops every day, and that released $2,450 of profit, presumably less slippage and a bit of commission. And then we had a TO3 sell signal right at the top, and you can see that that bar hits the blue line at 22,084. Okay, and that high on August the 7th is 22,081. It's 3 ticks away from that blue line. And that's the sort of degree of accuracy we get at these Danielcode numbers. And while you're watching this webinar with me, I want you all to be thinking about, why is this happening? Why are these signals being created? Why are these markets turning? And you'll come to the realization that these markets turn at the Danielcode numbers. If you want to do some more research on that, go to the Danielcode website and check on the chart archive. There's about 34,000 charts in there. Every chart I've created since we released this to the public in 2008. And you will see, you'll be hard put to find a market that's turned anywhere except at one of these Danielcode numbers. And these numbers, these are not Fibonacci numbers. They're not old highs and lows. They're not related to anything you've ever seen. These are a complete different standalone ratio. And I hope by the end of today, you'll appreciate how important these numbers are. Now, I create all these numbers for you. We have 15 charts that we publish every week. Twice a week we update them. So that's done for you. For all the other markets that we cover, these signals will that we create, the TO3 and the plus signals, will tell you when they've reached a number. That's important. So there was you had your big buy up. There's your sell down. Then you had another correlated plus buy signal from the TO3 plus suite of signals. That got you the run up to the high. Look where it closed, that high up at August the 16th. The close of that bar is 22,012 against the black line, 22. That's not the close, that's the other one, that's the high. That gave you a TO3 sell signal. There was another number in there that's not on this chart anymore. That gave you the TO3 sell signal for 816. And to make sure you didn't miss it, I posted it again for today. I put up another TO3 signal for today for 817. Just make sure you didn't miss it. And today's sell-off is at $1,200 there in the Dow. So there's 2.5, 3.5, 4, about $5,200 in 1, 2, 3, 4 trades. And all you've got to do is follow these signals. But I want you to understand when I talk to you a bit later about trend, because that's vital. If you can understand trend and correlations, remember gold, silver, and the Huey index, they are also very, very highly correlated. In the same way as correlations work for you in the equities, it's the same in gold and silver. If you have a signal in gold, you can execute it in silver. If you have a signal in silver or the Huey, you can execute it in gold because they're so highly correlated. How far in the future the TO3s go, Joe? What's it project for this market going forward? We don't know anything about the future, Joe. I have no idea what markets will do tomorrow. That comes more into our fourth seal forecasting, which is longer form of forecasting. And I'm going to show you some of that as we move on. But basically, The TO3s, when they're posted, they're valid for 2 days. Today, the day they're posted, and the next day. And these signals are posted, we get our end of day data at 6:30 US Eastern Time from Trade Navigator, or soon after. These signals are posted 1 hour after we get the data. So you have plenty of time to think about how you're going to execute them the next day if they are elected, always with that proviso. The blue line signals are valid for 3 days, including the day of posting. And the plus signals are valid just for the day of posting. Let's move on. This is the Aussie USD. I want to show you a bit of stuff on Forex today, folks, because I know a lot of you. Toddy Timmons just joined us over there in California. Tommy, hello, Toddy. Nice to have you with us, old mate. He's a great old pal of mine. Good to see you here. I want to show you some stuff on Forex today because I tend not to do much on Forex now, and I don't want to give you the impression that I'm not interested in it. I don't trade it as much as I used to. I'm so busy trading futures that I don't trade Forex much anymore, but I'm vitally interested in it. We have a lot of clients who trade Forex, so I need to show you this stuff. Forex markets work exactly the same as futures markets. I know that there is always a move by the people promoting Forex to try and present it as something unique and different. You know, they want to talk about pips instead of ticks. To my mind, pips are something you get when you squeeze an orange. But you will see from these charts, Forex markets work exactly the same as Forex. Let's have a look at this chart. This is Aussie USD. And you can see this is an important market. The high of that bar that goes into the blue line that has the first signal on it, the blue line turn from the plus package, the high of that bar is 8066. And you can see the blue line was at 8067. That's what we call target recognition. Target recognition is valid at the bar high low or on the close. Both of those methods of target recognition are valid. So this market roared up, big outside bar going up, lots of volatility and excitement in it. It hit that blue line and it turned like it was hit by a train. It put in its high, huge momentum high, one tick away from the blue line. It's quite extraordinary, isn't it? And down it went, and that was a blue line turn from the plus package. It then ran itself down until that date, if you want to look at it on your own charts, is 0727, and then it ran down until August 15th on Tuesday this week, and you can see its close on that day was 7821. Look at the red line there, 7818. 3 ticks away. This market closed 3 ticks away from important support, and that's what made it turn. Ask yourself, why do markets turn? They turn at Danielcode numbers. That gave us a TO3 buy signal, and look what happens. It rallies up into the red line resistance at 79.61, sticks its head through it, not much. 79.63 was the high today. Just 2 ticks. You see how controlling all these, I mean, markets are so rational and so controlled by the Danielcode, you will just be amazed consistently the more and more you learn about it. Any idea of random walk is a joke. How you get a Nobel Prize for a piece of research which is absolute rubbish is one of the great mysteries of the world. But the Nobel Committee is pretty famous for doing that, as those who follow its more recent gifts will appreciate. But markets are never random. Markets are rational. They're controlled by a mathematical model, which is the Danielcode, and the degree of accuracy with which these markets turn at the Danielcode numbers is really quite extraordinary. Now, I've had the Danielcode in one form or another for 20 years, 21 years, something like that. It took me years and years to find it. It's all completely unique and different. It's like nothing you've ever seen. But I've had it in one form or another, always improving, getting better for over 20 years. And I promise you, no one is more surprised at this stuff than I am. Every morning I open my charts, I go, wow, look at that, amazing. And here's another one. Huge momentum move up in this market on the buy signal. Hits the red line, goes through 2 ticks, that's it, bye-bye, turns around. Incredible, isn't it? Let's move on. This is Euro JPY. I'm showing you the same thing here. You had a buy signal right at the recent low. You had a TO3 the day before. Sometimes these signals come a day early. Always better early, no value at all late, these signals. And then for the next day, it had a plus buy signal as well. Off it went, roared up. The bar before the high, Euro JPY, is August the 15th. The high of that bar is 130.033. Look where the red line was, 130.032. That's target recognition, and that sets up the probable reversal. Now, what happened the next day that the market runs through that and then does a big key reversal bar? That's quite common. That's what I call the oops, sorry bar. The right number for that high was 130.032. You got that the day before the high. You got that exactly on the Tuesday, 130.033. One tick away. That was the target recognition. Then you had the next push up, and then the market got a belated idea that it was wrong. That's the oops, sorry key reversal bar. Pretty good indicator. We had that set us up for a new plus signal, sell signal for today, and down she went. It was a nice bit of trading, and that trade just for today is worth almost $1,000 per one contract. Pretty nice, folks. I hope you got all the money. This is the British Pound USD, and what I want to show you here was the start of the blue line trades, and this trade, in fact, was a TO3 sell signal, the turn signal. It wasn't precise enough to give us a blue line trade. The target recognition just wasn't quite accurate enough. You can see the close of the bar that gave us the signal. It was almost a blue line trade. Didn't quite have all the characteristics that's required of a blue line trade. Let me see if I can expand on that idea for you a little bit. And I think probably there's a simple solution when I find my other charts, and here it is. We had almost everything there. The high of that signal bar was well through the blue lines. The close, that's the other alternative, is 13191. And you can see that the blue line was at 13216. That's not close enough to give us a blue line trade. Every other condition was in place for a blue line trade. We had the fast stochastic, the 533 stochastic was overbought. The slow stochastic was overbought. And we had divergence, strong divergence on our proprietary momentum indicator. And they're the conditions we require for a blue line trade. But in this case, the target recognition of that blue line number was not accurate enough. So that turned out to be a TO3 trade. For turn, it did not have the required exactitude to create a blue line trade. And down it went. And it's gone all the way down there, folks. With only one counter trend. So the important point in here, if we look at the turn, and here we are, we've got almost $3,000 per one contract in this trade. Let me bring over here one of the tools, which is called a spotlight, and I want you to look at this big bar down here. This is August the 3rd. So all we had was a TO3 signal at that stage. When that bar closed, when you did your end of day download and saw that bar, you've been short, you took the TO3 signal, you've sold. That should have told you when you looked at it that there's been a change of trend. Okay, you need to be able to identify trend as soon as possible. There's many ways of doing it. We have a couple of proprietary ways that I teach at tutorials. But this one was fairly obvious. This is way outside any trend channel, and I haven't got that particular chart here. I think it's the start of a waterfall for you tutorial folks. It's also the start of a tutorial of a waterfall, which you know about. So you had at least two reasons when you had the close of 0803 at the end of day download done, when you got your data, you had at least two reasons to say this is a change of trend. And if it's a change of trend, you want to try and stick with the trade. And what we do is we use, if you're trading price, if we're trading time, for those of you who've done tutorials, we know it's entirely different. But if you're trading price, which is what the website does, you'll use a 2-bar trailing stop. Keep your stop loss above the highest high of the last 2 completed bars, not counting inside bars. And we link it to this stochastic here. So all the way down here, we have a 2-bar stop, 2-bar stop. And when this stochastic gets oversold, we go to a 1-bar stop. If you trade it that way, go back to my other tool. If you trade it that way, we got, what have I done? I've changed the chart, haven't I? Right here on this little outside bar here, which is dated August the 11th, you're at a 1-bar stop and you got stopped out. That's fine. If you knew the trend was down, which you well and truly knew by then what's your job? I say to you, what's your job? The answer is get with the trend. That meant you had to sell that low to get back with the trend, and you got the next run down. And I think GBP USD, haven't got all my papers here. I think we probably had a little buy signal for that today. And you can get out. You can have your stop loss where you get out. The point is, if you knew the trend was down, and the simplest way of trading, folks, is just take the trades with the trend. When you're a good trader, particularly when you've learned how to trade time with the Danielcode, you can stay in these markets all the time, up and down both ways. You're never out of the market, which means when the market gives you a surprise, it's lovely, you're in the market, you're always with the trend. That's what we teach you at tutorials. But for those of you who are not so advanced, the simplest way to trade is determine the trend and just take the trades with the trend. Have a look here. Why is this bar here, this big outside bar? This is back on July the 26th. Why is this such a big bar? It's with the trend. Go back 8 or 9 bars to this monster back here. Why is this such a huge bar? This is July the 14th. It's with the trend. The big moves go with the trend. Have a look at this thing coming down here. Here's your key reversal bar. That's the biggest down bar on the chart. That's 0803. Look at the next bar. Big push down. That's the trend. Back 2 bars from today to August the 15th over here. That's the trend. See how much bigger the trend bars are than the other bars. That's where the money is, and that's the easy way to trade. Okay, and you can tell this very easily from the Danielcode signals. You can see these reversals. This is dollar CAD, Canadian dollar. You had a blue line buy. Look at this, right? Look where this market got to. Let's bring it up here so I can see it on the other computer. Here's the low. This is the low with the outside bar back where we got the first turn signal. The low of this bar is 12414. Look where the blue line is. 12416. If you get a turn there, folks, a change of trend is almost guaranteed. Okay, and what we had was a blue line buy. That's why it's called a blue line buy. It has target recognition of one of the blue lines. The blue lines tend to be trend change signals. And off it went. And just look at it straight up. There's not one counter trend for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days before you hit a counter trend. It's a little shudder. Up it goes, right up into the high. That high bar had a close at 12756, 2 ticks away from the red line, which you can see at 12758. That is target recognition. That's what set up the TO3 sell signal. So think about it this way. In addition to all of your normal studies, your stochastics for price, your momentum indicators, you have these Danielcode numbers, and if you don't have target recognition with a handful of ticks, really, that's what it is most of the time, at the high or the low or the close, the market simply won't turn. And that's a difference that no other trading program in the world has, because nobody else knows what these numbers are. Okay, let's have a look at another one. See if I can drive you mad with this stuff, because this is your day-to-day bread and butter. This is how you make the money, okay? I know a lot of you are interested in forecasting what's going to happen in the future, blah, blah. All of that is very interesting, and we put a lot of time and effort into that with the fourth and fifth seal. But the reality is it's the day-to-day trading that makes the money, and that is about time and price, okay? TO3 signals have an element of time in them. When you do the tutorial, you learn about pure time signals. You can see even more. And have a look at this one. This is dollar yen. This is usually a pretty nasty trading market because it's just so much arbitrage going on in it. And this one was a little bit different. This market had on its low, it had a low of 108,739. You can see that's quite a way away from the blue line at 108,657. What you didn't see, because we don't publish weekly charts, but I maintain the weekly charts, so I see them, is that low at 108,739 sat right on a blue line, exactly maybe one or two ticks variance of a weekly blue line, which are different to the daily blue lines. So I post the blue line and TO3 signals. So even though you don't see the weekly charts, you see the signals at the website every day. And that's why we post them for you. So there was your blue line and TO3 signal. Off it went. You got a couple of really nice big bars up, plenty of money in that. And then you got to the high there, which was on the closing high. Remember, there's a difference between the chart high and the closing high. This bar here is, you might be able to just see the little arrowhead there, which is 0816. That's the chart high. The closing high is the bar before, which is this bar here, which is Tuesday, August 15th, Tuesday of this week, and that's the closing high. What you don't see is there is another line in there, which was at this high, is 110,849. That's the high of the momentum bar, not the chart high. That's the closing high. That high is 110,846, and there's a number in there on the daily chart at 110,898, which is pushing it. But same thing on the weekly chart. There was a high. There was a red line. I'm sorry, at 110,848. So you got a TO3. You got a plus from the TO3 plus set of signals. You got a plus sell signal for today, which was pretty nice. So even though these charts are hitting, there are valid blue line numbers in daily charts, weekly charts, 6-day, 12-day, 24, lots of different time frames. Even if they're not actually on the daily chart, I'm seeing them and I will post the signal accordingly. That's why we put those signals up for you every day. Okay, nice trade there. This is the US dollar index, folks. Just let me make sure that the screen has changed for you. Sometimes it's been a bit slow lately. Yeah, you can see it now. Very important, this low in US dollar index. This has been a total disaster recently. Very, very much cheaper dollar index is great for US businesses because it means that they're getting more for their exports, but they're also paying more for for their imports. But if you're an export-oriented business, this is great. Keep all those exporters happy. But it's generally been a disaster. Don't forget, your net worth as Americans depends on a large extent on this index. This index is just, you've lost so much money on your fixed investments and your equities in international terms that it's hardly true. Tuesday, this is Janet. Tuesday you made money, but if the stop is below it, you would give it all back. Which market, Janet? I'm going to come to all your questions, Hugh and Michael. I'll come back to all of your questions. US CAD. I don't know how long that post has been up. Sorry, Janet. Tuesday you made money. I don't know. Yes, you made money Tuesday. Wednesday today we were talking about. You had a TO3 sell signal for Wednesday. Okay. So this is hopefully this is an important bottom, but there's nothing in here to convince you about that yet. At the moment, what we can see, we had a blue line and a TO3 buy signal. The blue line recognition is not the blue line you can see on this chart. It came 2 days earlier at that low, DX. Here we are. It came at the, excuse me, July 31st low. You got the target recognition. Then you had an inside bar, a little push down low. That doesn't invalidate the signal. So you had a blue line and TO3 buy signals to show that turn. This was also a big play on the fourth seal. Frank has been highlighting this. He gave you targets, and we're going to look more at that as we go through. The US dollar index, even after these months and months and months of being down, it finished up putting in its bottom exactly on one of the blue lines. I think I'm going to show you that later on. So as soon as you got that buy signal elected, which is this big bar up on August the 4th, you knew that we'd had a change of trend. That's obviously a change of trend. There are various ways of measuring it. But knowing what the daily trend is vital to your trading because you can adjust your risk profile accordingly, whether you're with the trend or against the trend, or you can simply trade the trades with the trend. If you elect not to take reversal trades, the problem is you will miss out on the big breakout bars like this one of August the 4th. Because that starts off by looking apparently simply as a counter trend. It's not until the day is finished that you know that that's a change of trend and a breakout bar. But that's fine. Markets are going to go on forever. There's plenty of markets to trade. If you want to be really conservative with your trading and just take trades with the trend, you will do better. I trade both ways. Most of our traders will trade both ways, I know. And then we got a little pullback off the top. Look where that bar went to. This is the down bar of August the 11th, just before the plus buy signal, and it made its low at 92. Stronger pair of glasses here, folks. 92.830. Okay, have a look at the red line it hit. 92.82 against 92.83. Okay, the 5 at the end. That's just a half a tick. That's one tick away, two half ticks, one tick away in variance. That's what set up the plus buy signal that gave us the next run up. Okay, next one, S&P E-mini. Look at this, what a beauty. Right at the high here, we had a correlated TO3 sell. By that I mean the sell was not in the S&P. That outside bar there, and the little tiny bar before it, did not set up a valid sell signal. The bar before it, the setup bar, was not at a new high, so it couldn't create a TO3 in there. And we had no target recognition of the blue line on the S&P chart, but we did on other charts. I think probably on the Dow, let me see, and one other. Here it is. This bar is August the 8th. If we've got the book here for August the 8th, August the 7th, August the 8th. Here we are. We had a a TO3 sell signal for the Dow, and we had a daily sell signal for the Russell. So thinking about correlated markets, because we had those signals in the Dow and the Russell, it's valid to execute them in the S&P or the NASDAQ or the DAX, because all of the equities are so highly correlated that if the signal is elected in one, it can be executed in any other. So that's how you got your correlated TO3 sell signal at the top, straight down, 1, 2, 3 days down. Then it did this key reversal bar right here at the low, which is August the 11th. That's this little turkey right here. Look where his low is. The red line is 2430.50. Now that red line's been on there since the high was in place. Okay, so it's been on there for 4 days. 2430.50. That low, 2430.25. 1 tick away from the red line. So, folks, for any of you who are not using the Danielcode numbers, I hope you're thinking about this stage that you're giving up a huge advantage, because this is the biggest thing about the Danielcode that's so different to every other trading program, is you have these numbers. They're in advance. They're published in advance. If we're not publishing the particular chart, I'm seeing the charts anyway and creating the signals for you. We do miss some, but not many. And you can see this went up into the high, and that gave you the bar before, gave you the setup. It's the bar of August the 15th. The bar before the sell signal, that had a high of 2473.25. Okay, look at that red line, 2473.50. And that was on that chart from the day of the low. Target recognition within 1 tick. Now, in a market of 2,400, and there's 4 ticks to a point, there are 10,000 possible ticks in that number, and you had a variance of 2 ticks. I mean, I hope this is meaning something to you, because there was a great deal of money in this trade today. This was just super to add to everything else. One mini contract here was $1,700, plus the Dow, plus the NASDAQ, plus the DAX, you name it. If you're interested in making money, this is the place to be. Gold, here's your gold chart, folks. I did mention gold, and we're going to look a bit more at gold as we move along. Last time I mentioned gold, I managed to attract a few gold bugs. He said to me, "You didn't do enough on gold. It was false advertising." Honestly, leave me alone. We usually give gold a pretty good hammering. Have a look at this for a bit of trading, though. Here's your, that's what this is about, what you could have got with the Danielcode. We had the buy signal originated from August the 8th. That's a plus buy signal, and that was set up from 2 bars earlier. You can see the target recognition from 2 bars earlier. Before there was the August the 4th. That close was 1264.3. Look at the black line, 1264.5. 2 ticks. 2 ticks. 12,000 ticks available in this number. 10 ticks per point. And that set up the plus buy signal 2 days later. Off it went straight up into the high, which came on August the 11th. And the high of that bar, 1298.1. Where's the blue line? 1298. It's been on that chart for weeks and weeks and weeks. Okay, 1 tick variance. That's what starts to set up the sell signal. That created a blue line and a TO3 sell signal. Now, the blue lines are usually change of trend signals, but when I say usually, that means not always, and this is one that wasn't. This doesn't look like it's been a terminal change of trend, but it was a great sell signal, and it dived down 2 days into Tuesday. The low of Tuesday, 1272.7. Have a look at the red lines. There's one at 1272.5. That's 2 ticks away, and another one at 1272.9. That's 2 ticks away. That's target recognition. That's what set up the plus buy signal for yesterday, and we'll show she's moved away again today. Okay, you can't trade without knowing these support and resistance numbers. They are vital. Let's move on. I hope I'm not boring you with this, folks. I'll try and move a bit faster. This is Germany's DAX, same thing. Trying to show you that all markets work exactly the same way. Forex and futures, domestic and foreign, all work the same. That low bar that set up the TO3 buy on the blue line, the low of that bar, which was on August the 10th, was at 11,942. Okay, look where the blue line is, 11,941. Now, these lines are on these charts days, weeks, sometimes months before. You start off your turn with precise target recognition. That set up the TO3 buy signal. It's elected 2 days later, off it goes straight up. Roars up into the black line. David Webb's with us. He's the king of the black lines. The black lines are a bit different to the other support and resistance levels, folks. All of the other support and resistance levels work on the high and the low and the close, but the black line has a predominance on the close. It will often breach the black line but not close the other side of it. And the black line is the last level of support or resistance in any operating swing. And it's extraordinary. It's like being hit by a train. It stops freight trains. And we've got a mate in the States, Webby, who is a real king of the black lines, and they are absolutely fabulous, as you can see here. So it hit that black line. That sets up the plus sell signal for today. And look at the plus sell signal for today. The high of today's bar is 1228.7. Okay? The black line is at 12286.5. The high is 12286.7. 2 ticks. And what that was saying today was, sorry, yesterday wasn't accurate enough, guys. Let me prove to you that I know exactly where that black line is. And it did. It opened down at 12225, and it rallied all the way up to 12287. Why? Had to hit the black line before it could turn. Obviously didn't think the previous day's recognition was accurate enough. Markets are talking to you, and they are trying to tell you what they are doing. Okay, the markets are your friend. They are not your enemy. They are talking to you all the time. The problem is that most of you don't understand the language they're speaking. The language they're speaking is Danielcode. These numbers control, I know I sound like a crack record, but you know, this happens every day, every day, every day. I've been doing this stuff for over 20 years. It has never failed. It has never changed. This is soybeans. This has been a dramatic fall. Huge momentum, going nuts. Look what happens at the bottom. Okay, lower and lower. Nobody knows. We know. Have a look what happened on Tuesday, August the 15th, where the signal was created. The close of that bar, 924.2. The blue line, 924.4. That little arrowhead after the number is called a karat. Okay? And it signifies that these markets are being priced in eighths. In this case, 2/8 or a quarter. This market goes 924, 924, 2, 924, 4, 924, 6, 925. Okay, so the difference between the close at 924.2 and 924.4, the blue line, is 1 tick. Okay, accurate enough for you? Look where the low was. 922.6. Have a look where the black line is. 922.4, 1 tick away. Look where the closes are. Couldn't close below the black line. Very, very strong support. Okay, all we've got so far is a weak rally. I know that. But it's our business as traders to know where the turns are going to be and to trade accordingly. What a beauty. Australian expression. What a beauty. Here's the Russell, folks. Crikey. It's going to be, Joseph, yes, we have the DX coming up in detail. It's going to be a long webinar today, folks. I don't know how you feel. Cool, says Joseph. I'll just keep going. If you have to leave, leave. I'm recording this. If the recording works, you'll be able to see it later. But we're going to be at least 10 or 15 minutes over time. for which I apologize. I have so much to tell you. Okay, this is the Russell, same thing. Have a look at it. Look at the money here. Look at the precision here. Look at, more importantly than anything, folks, at the certainty of your trading. Okay, at the high. This is the high, way back here, July the 25th. This was an S&P correlated trade. It looks like a Russell blue line trade on this chart. It wasn't. That high wasn't close enough. That high was 1452.3. The black line was 1453.4. Okay, that's 12 ticks away. Well, marginal. We could have said it's close enough. 0.01%. Mr. Peel, who's the mathematician, or Mike Mitsos, if he's with us, that's within your 0.01%, but for whatever reason, we had a better signal in the S&P. On the basis of these markets being correlated, you executed that trade in the Russell or the S&P or the Dow or the DAX or the NASDAQ as you wished. And down it went, right down, and it gave us another, you can't see the blue line on this chart, it's gone now, but on August the 3rd, we had a blue line and a TO3 buy signal. It rallied 2.5 days and failed. And it failed because it was hitting resistance on the red lines, and we had a plus sell signal, which was elected, and that's what turned this market back down again. Then it flew down, a couple of big decent days down, one big day down, and then it did its key reversal bar where you see the last TO3 buy signal. The low of that bar is 1363.6. Have a look at the support on the red and black line. 1363.3 and 1362.1. The red line is 3 ticks away. You've got this market diving down, increasing its range. Huge super bar. Then it just stops. Does a reversal. Why? Hit the Danielcode number. Yes, there are many numbers, but we have ways of filtering out which are the ones that are most probable. And remember, folks, we're always dealing in probabilities. No certainties in life, no certainties in trading, but we can get the probabilities hugely on our side by following a set of rules. Hugh. Thanks, John. Been trading TO3 Forex, been going great. I see the nuances in the lines, which I've been disregarding. Okay, Hugh, we can make you a very, very much better trader. Folks, any of you who are members or who would like to be guest members, you're very welcome to join. If you want to talk about trading and you're serious traders or want to become a serious trader, shoot me an email with your phone number in it. Tell me what time zone you're in, and I'll give you a call and we can have a chat. Okay, that's can't guarantee I'll do it that day or even that week, but I will call you if that's helpful to any of you. Always interested to talk to our clients. Okay, up she went. We had a correlated sell signal. This didn't quite get the number on the red line. The high here, 1400.3. We were at 1401.1. You can see how tough we are on this, can't you? Didn't create a signal in this market, but it created sell signals in the Dow and the S&P. Because these markets are correlated, you could have taken that sell signal and down she goes. Big money today. Okay, I think that's probably the end of our charts here. We might have a couple more. Yeah. Markets turn in price at and only at Danielcode price ratios. Market turn in time at and only at known Danielcode time cycles. When time and price are squared, a turn is almost inevitable. That's our mantra. This is what happened in the US dollar index. You were interested in, Joseph. We have a service you can subscribe to called the Fourth Seal. It's run by a guy called Frank de Beer, who's a terrific young chap. He lives in Belgium. He came down to Taupo, New Zealand, to one of my tutorials. Never seen a chart in his life. Brought his fiancée with him, Anne. Lovely lady. They're now married. Couple of babies. And he'd never seen a chart in his life. And he became an expert. He was so intrigued with the Fourth Seal. It was actually the first tutorial I ever taught it. and he just focused on it so much he's become an expert on it. And he runs the Fourth Seal. He helps me with that, does most of the work, I must say. And you can see that he's been tipping this bottom for the Fourth Seal from a long time out. If you're interested in the longer term prognosis for any of these markets, they're available at the Fourth Seal. That's what he said. This is something else from him. This is on the S&P. This is what the Fourth Seal said about the S&P. Give you a moment to read that. And you can see that he's talking about time cycles and what happens at these time cycles. Okay, there it is. This, incidentally, the chart will change for you now. You'll see a big chart. This is a 24-day chart. Each of these bars is 24 trading days. And this is the chart that I've used in my article. It's called The Pie is Baked. It's available at the website, www.thedanielcode.com. You can go to the website, click on this. It's a free article, like all my articles. And what you've got here is a fairly complex picture. The black lines up and down, the vertical black lines, they're time cycles. And you can see we're right at a time cycle now, 118. That is twice the 59 cycle. This is not the crash cycle, but it's a cycle that will usually give us tops. Okay, remember, charts say nothing about quantum. The blue lines, their price, 2482.35. This is the index. This is the S&P index, and it just went a couple of ticks through, a couple of points through it, which isn't bad for a chart that's, that price started working itself from March 2003. And the diagonal red line you can see, that is a valid fourth and fifth seal line, and it goes right through the top of the market in the last week. And you can see from the blue lines running up there, that is a Danielcode trading channel. And you can see from March 2009, the S&P index has run up that channel without one single close outside 2 standard deviations from the mean. Now, this is not your normal standard deviations. These are Danielcode deviations. They're different. But it's still a regression channel type model. And you can see how orderly and refined these markets are. There is nothing random about these markets. This is an extract, folks. I'll give you a moment or two to read it, from The Pie is Baked, the article I wrote for you last week to alert you to the fact that we're at a significant inflection point. And you can see at the bottom it says, none of this equates to woe is me or the end is nigh. Nothing in trade signal speaks to quantum, but best have that seatbelt cinched in. Since I published that article for you last week, whoosho, we've had this wonderful downside action in all of the equities. What is the origin of the number 94, Norbert? Was that on one of the earlier charts, mate? Let's move on. You should have read this by now. I hope you have. If not, read the article, folks. It's sitting on the website. Okay, any of you that haven't done so already, you're most welcome to have a free trial. Simply go to the Danielcode website, click on the free trial button, and follow the prompts. Any difficulties at all, contact Terry at support@thedanielcode.com. Terry is currently in on the west coast of California, doing one of his car auctions. That's his other big client. Some people who run car auctions, very exotic cars like Batmobiles and very expensive cars. He'll be away for another 5 or 6 days. So if you don't get an immediate response from Terry, just bear with him. He's up to his neck in it over there. And the first day he arrived, his computer crashed and he had to get a new computer. What fun and joy. This is our compliance statement, folks, which I always like to show you because trading is very risky. And if you're not a Danielcode trader and you don't understand how to trade the Danielcode, it's very risky. And I don't want you to trade and risk money until you know how to trade. Okay, let's see what have we got here. We can get rid of this chart. And this was the chart that we talked about in the Pie is Baked. There it is on the pie chart. What's the 94? Norbert, what did the archangel say to Daniel? I taught you this, you remember. He raised his left hand and his right hand unto heaven, and he said, I swear by him that liveth forever, that it shall be for a time, times, and an half. So 59 is time, 94 is an half. Okay. Now, let me just put that through the little calculator here to make sure that you haven't made a liar out of me, or I've made a liar out of myself. 88 and a half, it's not, is it? 94, it's not an half. 59 times 1.5 should be 88 and a half, not 94. There must be another cycle in there, Norbert. These things are created automatically. So I'm not sure what the answer is to your question. But 118, oh, I know it is. It's a tutorial thing, mate. Let's have a look. 59 times. It's 1.59 times the initial cycle, Norbert. Okay. That gave you the top. That's not actually the cycle. Let me see if I can change this for you. Put on the right one. Why have we got these here? That's okay. It's this one we want. That's 0.5. That's 59.3. There's your 1.5 there. Okay. 59. Why is that coming up? It should. That's not a half. 59. 59. Well, I've got the 1.5 on there. It doesn't seem to be showing up for some reason. It must be another one underneath here, Norbert. It's 59 times anyway, mate. Okay, so, gosh, we're running late, aren't we? Folks, I had a lot more to show you. Would you like me to go on, or would you like to save this for another day? Just type in questions what you'd like me to do, because we're running out of time. Go on, says James Bond. Anyone else? What's the vote? They're all go on, go on. Okay, well, everyone's go on. No one said piss. No one said piss off. Rose, go on. Yeah, sorry for my language. Keep going. Okay, shaken, not stirred. Good. Okay, guys. Actually, thank you. Well, you seem to want to know more, so I'll go on. If you have to leave, I forgive you. Go. We'll record this for you. Let's have a look at gold. Don't want to be accused of not doing enough on gold. First thing to look at with gold always is the weekly chart. And here it is. Your chart should change any moment. Here's gold weekly. You have been seeing this chart since way back in about 2010. You've seen it often. You've seen this number 1297.4 repeatedly. This is resistance. This is a Danielcode red line on the weekly chart. Look where these highs are. 1298.1. 1296.4. They just absolutely stopped with its resistance. Now, I know there's a great old story about third time's a charm. There's one hit, two hits, three hits. That's the third hit on the same number of resistance. Third time's supposed to be the charm and it goes through. I don't have an opinion on that. I enjoy all of these stories and little sayings, but if I can't test them, then I don't put any credence in it. What is happening here, though, this is inversely, what's driving this on a day-to-day basis is the inverse correlation with the US dollar index. Dollar up, gold down, dollar down, gold up. This is signaling continual weakness in the dollar. And if it breaks above this support, it's got a fair way to run. This is very, very strong resistance, three highs. It's also, the three little chiefs, this is also a well-known failure pattern. I don't express an opinion on that either. Just follow the Danielcode signals. Yes, James, we do 6 days. We use the 6-day charts for our timing cycles. This is just a special one I have for gold because the gold buffs like to have some special treatment because they are special people. We have a lot of gold bugs that follow the Daniel Code, and we love them. I know a lot of them personally. They're great people. They might well be right too. Don't worry about that. We'll see what happens. Okay, let's move on. That was the first one I wanted to show you on gold. I also wanted to show you on the webinar. This is gold. What I'm trying to show you here, this is a daily chart, and I'm trying to show you these retracements. There are all these interesting ways of finding retracements, and I can spend a whole hour showing you the idea that all these highs and lows come at support and resistance created by previous highs and lows. And they almost always do, but honestly, sometimes they're so far away, you have no realistic chance of identifying them. See what happens here. This low here comes, you've had this big run up into here, then you get this low, here it is, and here's the old high over here. Can you say that this low here is caused by this old high? Yeah, you can, but it's such a minor high, why to be of any significance? And the main thing to remember is that there are different swings, okay? From this high here, which is February 27th, they all go, well, these early ones go down to this low, which is December the 15th, 2016. That's the operative swing for that whole section. From this high here, the operative swing is right down to the same low. From this high here, this is June the 6th, the operative swing is this little guy here on December the 20th. And that's the one we call the penultimate low. If you've been with a long time, you'll have heard me talk about it before. Most of these swings go to the low or a low. There's a number of lows. But this one, the penultimate low, the low after the low, is very commonly a very, very strong and decisive trend line. And so from the big high in June, it runs down. Its swing is related to that penultimate low. Why is it different and what does it mean? It has to do with timing, and it has to do where you start and where you finish your timing cycles, which I'm happy to teach you. If you're interested, come along to a tutorial or email me. You can do them by video now from the comfort of your own home. Okay, so from the first run up, this is gold. I want you to know I'm talking about gold today, guys. Here's the first run up. Look at it. This is the high. This high is 1220.1. There's a red line, 1220.4. Okay, interesting. It is, but why? Because that's actually part of the retracement from this high. Okay, it hasn't happened yet. Why is it putting in a high at the exact retracement? This is January, from a high that's not going to come for another 3 months. Okay, think about that. It's fascinating. And how can that be? Well, how it is that all markets are fractals, and there's only a limited number of fractals in the Daniel Code. There's an infinite number of numbers, but they're just repeating the same fractals. In other words, way back here in January, it looked like an ordinary, innocent, nice tradable high. This is January the 24th. That high forecasts the high that comes 3 months later on April the 17th. And that should shock you because you've never heard that before. Incredible, isn't it? Okay, so there's the first retracement from this high to the original low. There it is, 1181.5. Shoot through that a bit, 1179.7. 8 ticks away. Yeah, it's we'd allow 11.5 ticks at this number, 0.01%. Up it goes, eventually it makes its high, then here's its pullback. This low comes at, there's the low, 1194.5. Look at the retracement numbers on this chart, 1194.6. 1 tick away. 1/10 of 1100 points. Okay, 1 tick variance. Off it goes, rushes up, makes another high. There's a blue line up there. Here's your pullback. Okay, where does it stop? Okay, looks a bit fluffy, doesn't it? There's the low. That's where you can see it. There's the low, 1214.3. Marilyn, if you're still with us, I'm seeing you in 1 o'clock. I'll still be on time, forgive me. Look at this low here, 1214.3. There's no number there, okay? What's the next thing to look at? Look what happened at the bar before it. It's low, 1221, okay, against 1220.4. It's 6 ticks away. That's target recognition. What happens? This is the inside bar afterwards. The close is 1219.1. Okay? It's a handful of ticks away. What happens with this little outside bar here? Where does it open? 1219.2. All about here, and look at the close of this low bar. 1221.1 against 1220.4. Okay, that's 7 ticks away. That's target recognition. Off it goes, rushes up to the high. Down it comes here. Look at this. There's no number at the low here. The low of this bar is 1204. There's no number there. Look at the close of the setup bar, which is the bar before. 1211.9 against 1213.1. It's 12 ticks away. That's target recognition. Okay, it's right at the extreme of what we allow, but that's target recognition. Have a look what happens on this next bar. The low's nowhere near anything we're interested in. The close is 1213.7. That's 6 ticks away from that red line. That's target recognition. Okay, so that's what you're looking for. Markets will not turn. Will not. Never, ever, ever will they turn except at a Danielcode number. Now, is it possible that the Danielcode number that the market turns out is not on the chart? Yes, it is, because there's an infinite number of these numbers. They only use the same 5 patterns all the time. All markets use the same 5 patterns. But sometimes these charts, they're creating support and resistance, Danielcode lines from hourly charts, 2 hours, 4 hours, 5 minutes, 3 minutes, anything you want to think of. If you put them all on a chart, they'd just be a mess. So once we've got them worked out, we then have to run series, what they call netted or bracketed chi-squared, one inside the other. Their statistical test to find the numbers that have the highest probability, and we put those on the charts. Is it possible there'll be a number at which a market will turn where I don't have it on the chart? Yes. Does it happen very often? Very, very frequently. Okay, if it happens, I put it on the chart. I say, turn at a number you didn't have on the chart. Here's the number. I don't think there's been one this year. It happens like once every 6 months. Don't worry about that. We don't miss many. Okay, so there is gold. We've showed you there. We wanted also to show you dollar CAD on this daily chart setup. And what I wanted to show you here is the importance of ascertaining trend. Okay, have a look at this. This is a buy signal here the next day. This is the dollar CAD, April the 18th. Up it goes. Okay, there's a sell signal. The trend changes to down on this bar, April the 5th. And it stays in that downtrend all the way until it gets to June the 21st. This one bar here turns the trend up, and almost immediately it's turned down again. Okay, so how long does trend last? It can be just a day or two. Normally it's longer. So there's a difference between what is the trend and is the market trending. This market's trending big time. This rundown here is worth $10,000 per one contract. And we'll show you how to get rid of the blips in the middle. So this runs all the way down until this bar, which is July the 27th, at which stage the trend changes to up. The most important thing is you must be able to identify within 1 or 2 days from the turn the change in trend. On April the 18th, we could prove, and it's not an opinion, we can prove it with the tools we use that are quite objective, that the trend is up. On this bar here, this was fairly obvious. May the 5th, we could prove that the trend was down. It stayed down all the way until June the 21st. That turned itself up, and it only turned itself up for 3 days. One bay down, 2 little inside bars, and the minute it took out the low of this setup bar, which was 620, that told you the trend had reverted to down. So we knew the trend was down again on June the 27th. There were actually some ways of telling the trend was down on June 22nd. You had a time sell signal on that day, which told you the trend was down. Okay, but you don't know that until you do a tutorial, so I'll just tease you with that a little bit. So we knew the trend was down, and we sold the day after that uptrend signal. Then all the way down, right to the bottom bar here, one day after the low, we knew the trend was up. If you knew that, look at the possibilities here. There's 10,000, 12,700. There's $14,000 possible within this trading pattern. While the trend was up, we get up here, here's the top. Here's your sell, right at the high. What happens if you only take the sell signals? Don't take the buy. Just put your stop loss. If you have a valid buy signal, put your stop loss where it would be elected. Okay, it doesn't mean anything having a buy signal. It matters when it's elected. Okay, and just let yourself get stopped out. Do the same here. Just let yourself get stopped out. Wait for the next signal. Get yourself stopped out. Wait for the next signal. Look what happens if you're trading with the trend. Now, admittedly, you don't get a big trend like this all the time. In fact, not even very often. But when you get it, the money you can make by simply trading with the trend is fantastic. It will lower your blood pressure, make you smile, make your dogs and your wife happy, maybe your horses as well, and it will certainly improve your bank balance. Unless you are an expert trader who can trade Danielcode time signals, then if you haven't done that yet, the best way to trade is trade with the trend. Okay, let's have a look at the 6-day chart. Don't go away, whoever's waiting for DX. Here's the 6-day chart. This is gold. Have a look at it. This is just another version. I've shown you this already. 1297.4 is a Danielcode retracement. It's been on this chart since December 2016, that number, and you've seen it several times. Bang, 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 just keeps hitting it. In here, I wanted to show you the S&P. Excuse me, this is the index, folks. Crunching that in to try and find you the number. Here it is. You can see it here. It's got a bit jumbled up. See if we can separate it a bit so you can see it. These numbers have been on the chart for months and months and months, and I've done tutorials about them. If you go back through the earlier webinars, you'll see us talk about this. 2404, we said that way back sometime like about January at one of our webinars, and then 2404, I said 24, make it 2400. 3 days later, Goldman Sachs came out and said, oh, it's going to be 2400, the next top. And then everyone came out and followed them, and there we are. That stopped it for 1, 2, 3, 4, 5, about 8, 9, 10 weeks. And then told you the next number was going to be 2482. Okay, this high, 2481. This is a 6-day chart, 6 bars in every chart. This one, 2484, now you've had this little false break all the way up to 2490, but the highest close, there's 2459, and that one is 2470. So this is the bar with the highest close. This is the closing high. It's high 2484 against 2482. Very nice for a 6-day chart, isn't it? Okay, just wanted to show you that, catch up. Now, what have I got? DX dollar index on the 12-day chart. Here it is. Okay. Look what's happening here. Joseph, I think it was asking about the Danielcode. Look where this thing's holding. Okay. We had a red line at 93.45. This is a 12-day chart. Each of these bars has 12 days in it. This was what was holding it to start with, 93.45. Then we had this blue line at 92.87. Okay, it wouldn't close down there before. Stuck its head through here on September rather, 2015, did a quick reversal to get away from it. This is the bar that validated that price. This is May the 3rd, or the 12-day trading ended on May the 3rd. Look where it closed, 91,880 against 92,870. Same with the next bar, sat on it. We've just got a first little close below it here, just broken through it. There is a potential for this to go lower. Okay, that was that, and then the biggie I've already showed you, but it was the last chart I want to show is this one, S&P trend. This is why we thought there was a significant inflection point in this bar here. It's at the target, and it's also at a price target. 118 is twice the 59. It's what the Archangel Gabriel said. It shall be for time, times, and half. Very important. Okay, folks, we've gone long over time, but let me see, we've got some questions here. For those of you that are kind enough to still be with us, let's see what we light another one. You're quite right. James, we use the 6-day chart. Yeah, that's what we use for our timing chart. Special one for the gold guys. Alex, does it work with the digital currency? I don't know, mate, because I can't. I don't have a chart of the digital currency. Tyson likes that's happy. Joe's got to run. Akshay got whacked about with the settlement signal on USD CAD about 4 days ago. What could it have done better? Let's have a look. USD CAD is here. Okay, so it's this one here that said fail, presumably, is my guess. USD, was it Friday of last week? I don't know. I haven't got that book with me. Actually, shoot me a line, will you? Just exactly what you've said there. Shoot me a line. Give me the market and the date, and I'll get there. Adrian, the spy, share price index. Where is he? AAP. We had. You guys should be enjoying this. I don't know what it's done today. This has been in a sideways trend, in a big consolidation for a very long time. Look at this, horrible, isn't it? Look at this, big consolidation, can't get out of its own way, flat feet. Look at where these closes are. In fact, we can look at that on a close-only bar. It's quite horrible. And my guess is, I haven't got today's data on here, but I can tell you that for today, we have a TO3 sell signal, which we put up 2 days ago. So I don't know, is there news? Has the market gone down? Let's see if we can find out. My guess is it's down, not enough to hit the front page. But it's a pretty crappy market, Adrian, but I will be happy to look at that in more detail for you at the next tutorial, my friend. Okay, so I'll drop like a stone, John. Listen, with you beauty, eh? The TO3 sell signal. Love it. We'll add that to the lollipop. John's down in Coffs Harbour, very beautiful part of Australia. Good to have you with us. Folks, for those of you who stayed to the bitter end, this has gone for an hour and a half. I do apologise. And I do hope you've enjoyed it. And I look forward to seeing you at the next one in a fortnight. Good on you, Hank. Enjoy the good sun up here. And I thank you for your forbearance with my inadequate time management. But I just had so much stuff I want to share with you today. Hope you've enjoyed it, and I hope you'll be with us for the next one, which will probably be in a fortnight or so. I've knocked off now for the week, folks, for those of you still struggling up there with the dark, cold nights, or warm in some places. It's spring down here. It's about 26 degrees. There's Rob, my mate, and crack the cup, John. It's exactly what I'm going to do, Rob. I'm going to go and sit by the pool, and I'm not even going to waste time on making a Bloody Mary. I'm going to grab a couple of cold beers out of the fridge and go and sit there in my shorts and contemplate the wonderful trading we've had this week, and knowing that the Australian SPY's down big time. That's the trade I had on, as well, because we had a TO3 sell signal for it yesterday and for today. That's for Thursday and Friday. Remember, I'm a day ahead of you folks. It's Friday, 12 o'clock. 1 minute to go to midday here. Thanks for being with us, folks. Mike, nice to see you here. Talk to you soon, mate. All the best, and thank you. Bye-bye.